and then convert that into a global commodity, Bitcoin, that can be traded and reach all corners of the earth. And so we're effectively serving as an energy sink upstate to take advantage of all that power when it's generated and converting it into something of value.
Wow, I'm quite astonished that so close to New York,
Yep.
you would have excess production and
It's a big
wasted.
state. It's a big state. And again, the transmission system needs upgrade, right? And so power can typically only travel a few hundred miles anyway. And so when you have issues where there's congestion and it's not effectively able to travel from one place to another, it becomes costly. And there's transmission charges, so it becomes uneconomic. And so, what made that coal plant not ideal and not very profitable upstate makes it the perfect location for a Bitcoin mining facility.
Welcome to a new episode of the Bitcoin Equity Talks, where we interview Bitcoin miners and companies building on the Bitcoin ecosystem. I have today with me Kerri Langlais from TeraWulf. Can you present yourself, Kerri, and your company's business model and specificities, I would say?
Sure. Thanks, Chad. And I appreciate being on a segment of your Bitcoin equities. So TeraWulf is a vertically integrated zero carbon Bitcoin miner. And so to give you a little bit of a sense of how we came into this business, my background and the team of executives that I work with have been working together as a team for more than 2 decades. And we've been working in the space of energy infrastructure. So we've been optimizing energy supply, developing, building, operating energy infrastructure assets, primarily power, both here in the US and overseas. And we've got a team of our own engineers and operators that do that. And over the course of the last, I'd say 5 to 7 years, we started to redevelop some of our assets here in the US that were thermal. So we had gas plants, we had coal plants, and we decided, obviously the decarbonization and the transition of the grid is now shifting. And so we were looking to redevelop those sites. And in some cases, we had locations that had very expansive land, obviously very valuable infrastructure from an energy perspective in terms of interconnection with the grid. And we quickly became introduced to Bitcoin mining. We were actually approached by one of the largest, now one of the largest and leading Bitcoin miners in the space, Marathon, to build their first mining facility in Montana. So we did everything from design the facility, build the infrastructure, install the miners, and then operate that facility. And in that process, we realized, at the core of Bitcoin mining is really energy infrastructure. So if you know how to, site your facility to enable procurement of power at scale and at the lowest cost, you're going to have a significant advantage. And we then took it a step further and said, there's really no reason why you can't mine Bitcoin using renewable and zero carbon resources. And in fact, we're sort of uniquely incentivized to do that because in order to, create the greatest amount of profit, you've got to have the lowest input cost, and the biggest input cost to mine a Bitcoin is the power that's required to do so. So we formed TeraWulf with the mission to mine Bitcoin using zero carbon resources. We have 2 sites, one in upstate New York, where we're actually on the site of what was the last operating coal plant in the state of New York. So we worked with the state to retire that facility in 2020. And what was the site of a 700 megawatt coal plant is now the home of our Lake Mariner facility, which is 110 megawatts of operating capacity today, but can actually grow to 500 megawatts. And that's sourcing the hydro resources that are abundant in that region. So, we're all the way upstate New York on Lake Ontario, where we're 20 miles from Niagara Hydro, which is a 2.5 gigawatt hydro power facility in New York. And we're basically absorbing all of that low-cost renewable power that's passing by our front door literally every day and is unable to get all the way downstate to New York City and Long Island where the demand is. The transmission infrastructure is insufficient or too costly to economically travel that far. So we're really excited about that facility. We wholly own that facility. We operate that facility with our own team. We're, as I mentioned before, we're vertically integrated. And our second site is in central Pennsylvania. We are the first Bitcoin mining facility to be directly connected behind the meter to a nuclear power station, which is obviously zero carbon. We've got 50 megawatts operating there today, and we can grow that by another 100 megawatts. So again, our sites are sustainable, scalable, and we control and operate our own destiny. I think the other unique thing about TeraWulf is if you look at our management team, we stand out relative to our peers in terms of the management's ownership in the company. So management, the board, and other key insiders own more than 50% of the equity. And so we are, squarely and uniquely aligned with our investors, and so are focused on creating the most amount of value we can for our shareholders.
Okay. And what about yourself? I mean, what brought you to Bitcoin? What was your personal story behind it, and how did you end up with TeraWulf?
So my background again is in energy. And so I've been on the advisory side, I've been on the investment side, investing in infrastructure. And so I spent a decade at Goldman Sachs in investment banking, covering energy and power companies, and then sort of transitioned to the private side where I was focused on investing and even ultimately operating facilities. So I've been very much a part of that ecosystem, the energy ecosystem. And so I think, again, by virtue of energy being the single largest component of mining a Bitcoin, and the fact that we're builders, right? We built power plants, we built energy infrastructure facilities. So building and assembling, was sort of a natural segue for our team of operators and technicians and contractors. So it became sort of from a business and professional experience, it became natural for us to sort of pivot into this sector. I think from a personal standpoint, you know, obviously social media, and that was probably my first introduction to cryptocurrencies, NFTs, all that was by virtue of our presence on social media. But now over time, now that we're sort of in the business and doing it and actually mining Bitcoin ourselves, I have a much better appreciation for the value, both from an environmental standpoint, social good, that we play both in supporting and basically validating the Bitcoin network, and also on the energy transition side as well.
Okay, so this is like more from a business perspective, but what about you from a personal view, and what orange pilled you? What made you?
I sort of come at Bitcoin from a Bitcoin miner standpoint, right? So my personal views on Bitcoin are obviously enabling from a social good perspective. I have a 10-year-old son and a 12-year-old daughter, and so helping them understand the difference. I mean, they're just learning about money really in school, fiat, and so helping them understand the differences between our US dollar and Bitcoin, and how that's different, and enabling, and how it's structured and controlled, and all that sort of stuff. And so it's from a personal standpoint, it's been a learning experience. And so I'm just very proud to be part of a business that's enabling and supporting both Bitcoin network and the energy transition.
Okay, and you mentioned New York. There have been a lot of pushback from New York State towards Bitcoin miners. How did you navigate this, and how does the current legislation in place affects you?
So again, I think when you think about Bitcoin mining and the role it can play, location is everything, right? You have to have a site that has access to low cost power at scale and over long term. And you have to be able to scale your site and grow it. And so when we came into that facility, again, it was a coal plant, right? It was a 700 megawatt coal plant that for decades had provided power to the New York grid. And so we went into that facility with the plan to redevelop it and have a very close relationship with, New York locally, and then obviously at the state level as well. And so a lot of people talk about New York, and it's a lot of the misconception that we try to sort of clear up when people think about TeraWulf. So the moratorium, if you will, was introduced to prevent people from sort of taking what otherwise should be retired thermal power plants, gas or coal, and giving them sort of a second life by virtue of co-locating a Bitcoin mining facility. So there are other Bitcoin mining facilities in the state that are doing that. And so what the moratorium did was it put in place a a framework that prevented people from doing it anymore. Now, we obviously are connected to the grid, so we don't have a power plant co-located on our site, and we are sourcing zero carbon resources. So we've got 91% zero carbon, primarily hydro upstate. So we are not, the type of facility that's being targeted by that type of legislation.
So if you're connected directly to the grid, how do you find competitive prices, or maybe
So again,
is
location is everything. So what made that site, again, all the way upstate on the shores of Lake Ontario, not attractive from a power plant perspective, because you had transmission challenges and you were all the way upstate, and the demand pockets were all the way downstate. There's very little demand upstate. The other factor is there's a tremendous amount of renewable resources upstate that often just go to waste. And so Niagara Hydro that I mentioned, which is a 2.5 gigawatt hydro facility located right near Niagara Falls, is 20 miles from our facility. And a hydro facility produces the power around the clock, whether it's used or not. And so you need to capture that power when it's generated, otherwise it goes to waste. So what we've been able to do is sort of flip it, and instead of putting power onto the grid, thermal carbon emitting power, we've now sited a load that today is 110 megawatts, can grow to 500 megawatts, that can absorb that renewable resource and prevent it from going to waste. And then, sort of take this local commodity known as power, right? They can't travel very far, and then convert that into a global commodity, Bitcoin, that can be traded and reach all corners of the earth. And so we're effectively serving as an energy sink upstate to take advantage of all that power when it's generated and converting it into something of value.
wow, I'm quite astonished that so close to New York
Yep.
you would have excess production and
It's a big
wasted.
state. It's a big state. And again, the transmission system needs upgrade, right? And so power can typically only travel a few hundred miles anyway. And so when you have issues where there's congestion and it's not effectively able to travel from one place to another, it becomes costly. And there's transmission charges, so it becomes uneconomic. And so, what made that coal plant not ideal and not very profitable upstate makes it the perfect location for a Bitcoin mining facility that access
Okay.
and renewable resources.
Okay, I'm always mesmerized by the inefficiency of the electricity market. Actually, it's the
Yes,
more I learn about Bitcoin mining, the more I find that the real problem is the electricity market rather than the Bitcoin mining food and all the misconceptions that people
and,
have.
and I think that's right. I think there's salacious headlines that talk about the consumption of energy that's required to mine cryptocurrencies. I think what needs to be better understood and more education about is the relationship that Bitcoin mining actually has with the energy grid, and the critical value and tools that it provides in balancing the grid, and then again taking advantage of those renewable resources that, if aren't used when they're produced, when the sun's shining or the wind's blowing, go to waste.
Yeah, actually, one of our board members actually used to work for Électricité de France. And in Europe here, there's a lot of pushback towards consuming more electricity. And they called for a day where everybody would shut down all
Right,
their electricity at 1 hour. And this was the worst for an electricity producer because he needed to balance the grid and there was no more supply. Like
right,
the worst thing you can do is like
yes,
reduce electricity consumption, which is very counterintuitive
right.
from a consumer's perspective.
And you can sort of, I like to think about it like a paper clip, right? When you play with a paper clip and you're bending it back and forth and, up and down, back and forth, and eventually it's going to break because it just wasn't built to do that. And so, we actually play. So if you think about the energy grid, it's actually completely turned, right? We used to have thermal power plants located, and so the supply would follow the demand. You'd have a power plant built outside of a major city like LA or New York City, and they were built so that they could turn up or turn down to sort of follow the demand profile. Now, with decarbonization, we're relying on resources that are typically in remote locations, right? Like wind or hydro or nuclear. And they're intermittent by nature, right? They don't, it's not 100% of the time. But if you think about, sun shines during the day and the wind typically blows at night. And so instead of the supply following the demand, you now have demand going to where the supply is. And the virtue of, the great thing about Bitcoin is it really doesn't care where it is or what time it is, right? It can mine Bitcoin at any hour of the day and regardless of location. And so we were able to use that significant load as a way to take advantage of the power. But then the other unique aspect about Bitcoin mining is it's very responsive, right? You can turn a Bitcoin mine off in a matter of minutes. And so when you have these periods of extreme demand, which typically only happen a few hundred hours a year, you now have a very large load that, several hundred megawatts that can respond in the matter of minutes. And so that's a very valuable tool as grid operators are trying to balance the grid with the influx of all these intermittent resources that are unpredictable and up and down throughout the day.
I'm so happy to have an energy expert on the line because I have so many questions. I noticed also that sometimes electricity prices go negative.
Mm-hmm.
How is it possible?
Because again, you have periods where you have an so there's at times, believe it or not, where renewable resources like wind facilities or solar facilities are curtailed because there's too much power and the demand is not there. And when there's an oversupply of electricity, that causes the power prices to go so low, even negative. And so that's again by virtue of trying to balance out the supply and demand. It's not perfect, and over time, I think technologies like Bitcoin mining and the ability to operate, remote operate and control demand from a central location, such that instead of the grid operator calling us and saying, hey, we're going to experience a period of high demand or we're expecting this, we're going to need you to turn off or be available to turn off, they can actually do it from a central location themselves. I mean, we all have cell phones in our pockets, right? It's only a matter of time. Many computers that we're carrying with us every day, I can control the heat and the lights in my house from my office desk. It's only a matter of time before we get there, and that's going to have a significant impact on the efficiency of the grid as a whole.
So you have like this fluctuating energy supply and fluctuating energy demand, and Bitcoin mining can act as
It's a balancing tool,
as a
right?
balancing tool
Mm-hmm.
between it. Do you see it also acting as a tool to finance new renewable projects? Because if you are planning to build a plant, your future revenues will depend on the growth and the demand, basically. So,
Right.
having a Bitcoin miner next to a new built renewable facility that should be helping
Incentivize.
forecasting better your cash flows and therefore building more projects because you have like this minimum cash flow you're going to get from the Bitcoin miners and eventually more from the end consumers.
That's exactly right. So we serve as a sort of an anchor tenant, if you will, and a very high load anchor tenant. Several hundred megawatts. I think the other aspect that incentivizes additional renewable investment is if you think about the energy grid and even building these power plants and solar facilities and wind facilities, there's a tremendous amount of fixed costs, right? And so to the extent you have additional users on the system, more load, you're spreading that fixed cost across more users. So the denominator, right, you have more users and it's bringing down the cost for everybody. That's incentivizing as well for renewable developers to come into an area understanding that they're going to get the payback over a broader set of users.
So do you think like once all these elements are understood, will there be a time where energy consumption will not be seen as a bad thing, but put into context because there's a strong push against fossil fuels?
Mm-hmm.
And at the same time, the Paris Climate Accord are pushing towards more electrification. So we should be electricity based products.
Mm-hmm.
But at the same time, there's a pushback against consuming more electricity, spending more time on YouTube, watching cats, having screensavers on all the time, etc. So, how do you see it, and what would make the legislation at the end? Because if you think about it, they, instead of subsidizing renewable energies, they should subsidize Bitcoin miners, because these are the financiers of these renewable energies.
Right. Listen, I think that's exactly right. And I think education is the big part of it, right? That I've been in the energy sector for more than 20 years. So some things that might be straightforward to me are not straightforward to the everyday journalist or, retail investor or anybody. It takes time to understand. But the way that I try to think about it is, we're a public company. Our fiduciary obligation is to generate the most value we can for our shareholders, and that's by virtue of the profit. So our mission is to mine Bitcoin at the lowest marginal cost. And so we are naturally driven to the lowest cost power. And so we have to have a symbiotic relationship with the grid. As soon as we become a burden to the grid, prices are going to go up and our profitability goes down, which makes us obviously not able to fulfill our fiduciary duty of creating value for shareholders. So our existence has to be in unison with the grid. And I think the more that investors and legislators and policymakers understand the role that we have in the energy transition and enabling the energy transition, I personally believe that every renewable facility should have a Bitcoin mining facility located on site, so to serve almost like a battery, that it can absorb the power when it's generated and then have a store of value that then can be traded around the globe. So I think the more that people start to understand the relationship and focus less on how much energy is consumed, but how that energy is consumed, there'll be a shift in mindset, certainly.
Okay. What about your Bitcoin production? What do you do with it?
So we monetize our Bitcoin as we produce it. We don't hold or hodl, which is the term. We monetize what we mine. And I think, again, as being on Wall Street for decades and in the energy and commodity and power business, I find it hard to understand the HODL strategy from an operating company perspective, because effectively what you're doing is you're funding or financing your growth by issuing more equity rather than monetizing the Bitcoin that's on your balance sheet. And it's, I think about what other commodity business in the world, whether it's copper or lithium, oil and gas, that mines a commodity and then doesn't sell it because they speculate and think that the price is going to go up in the future, right? OPEC and Saudi Arabia don't do that. Glencore and ExxonMobil don't do that. And so when I think people invest in our company, they should own our equity, not because we're mining Bitcoin and holding in our balance sheet. They can, soon enough, hopefully go out and buy a Bitcoin ETF that gives them the ability to participate in Bitcoin directly. They should invest in our company and the equity of our company because, as I mentioned at the outset of this call, our management team is uniquely aligned with its shareholders in terms of our ownership in the equity. We own more than 55% when you take it together with the board and other insiders. And then we can mine Bitcoin at the lowest marginal cost of any of our peers, right? And return that profit to shareholders, whether it's in the form of a debt pay down, in the form of funding organic growth, or even as a dividend or a share buyback, but not by hodling our Bitcoin and speculating that we might be able to create value of selling that at a higher price in the future. That's not why investors should invest in TeraWulf. They should participate if having exposure to Bitcoin itself is the fundamental driver, that they should participate in an ETF or even buy Bitcoin for themselves, but they shouldn't be relying on our management team to make that decision for them.
Yeah, I've had this discussion with other Bitcoin miners that hodl, and what their answer was is that if you mentioned like Saudi Arabia, so they are sitting on an oil well, so they're already holding the asset, but they haven't extracted yet. So
Yeah.
in a way, they are long the commodity. At least that's what I claim. But deep down, what I believe is that you also mentioned the Bitcoin ETF. Today, we have a Bitcoin ETF in Canada.
Mhm.
We have a Bitcoin futures ETF in the US. And hopefully, we're going to have soon a spot Bitcoin ETF. But today, I believe some of the companies that are bought in the space are for their hodling and therefore for their exposure to the price appreciation of Bitcoin, regardless of the Bitcoin mining operation. Like MicroStrategy is
Mhm.
building a huge stock of Bitcoin just hodling.
Right. But they're not an operating company, right? So, as I said, when companies that are operating companies and mining Bitcoin, when they hodl, they're effectively relying on their shareholders to fund their growth, right? So they're issuing a ton of new equity, diluting their existing shareholders to fund that growth. We don't think that's an appropriate business model for TeraWulf. Again, our value that we can provide to shareholders isn't speculating on the price of Bitcoin, but rather producing a Bitcoin at the lowest and most efficient way that we can do using zero carbon.
Okay. And you also mentioned OPEC. I always wondered, why isn't there an OPEC of Bitcoin miners where instead of chasing and increasing difficulty, because at the end, the more Bitcoin miners there is, the harder it is to produce them. Why don't they form a coalition and set like OPEC does basically? If OPEC members were to produce oil independently from the OPEC constraints, then perhaps oil prices will go to zero. Like to the lowest cost of extraction, which is Saudi Arabia, and I think it's like $10 or $20 tops.
Mhm. Well, I think when you think about Bitcoin, it's like any commodity, it's cyclical, right? And the difference in the cycles at Bitcoin are there's a fixed event, right? The halvening that happens every 4 years, that in a way controls the amount of difficulty on the network, right? Because as soon as the halving comes, which we're expecting in April, the profitability to mine a Bitcoin is going to be cut in half. Well, those Bitcoin miners that are less efficient, right, that don't have the low production cost, are going to be forced eventually to come offline, right, because they're not going to be profitably, and there's only so long you can operate burning cash. And so there's sort of this natural evolution by virtue of the structure of the network to sort of control the supply, if you will, on the market at any given time. And I think also in that way, the profitability by mining a Bitcoin is obviously deteriorating over time. And so as we think about our business, today we think about, we need to have at least 30% of our business coming from something other than mining Bitcoin. And so today, as we think about that, that's in terms of the demand response, ancillary revenues that we get from working with our grids to provide those demand response services, such as, scaling back our capacity, responding to events at minutes notice, and we get paid for those. And typically when those happens, those are when the power costs are at the highest. So it's okay for us to do that. And so that's how we sort of think about it. But I understand your point that, but I think in the way that Bitcoin is and it's purely decentralized, I think you're going to have a hard time getting that coalition together to work effectively.
Yeah, actually, I've been following the whole industry for a while now, and it seems as time passes, it is more and more fragmented. I mean, I think all the Bitcoin miners in our ETF, which is all of the listed Bitcoin miners,
Mhm.
represent less than 20% of the hash rate on the
Mhm.
network. So I would have imagined also a huge consolidation of companies acquiring each other and then having this economies of scale that you see in the other commodities business, but that I didn't see in the Bitcoin mining space.
I
How do
totally
you
agree.
forecast this to go forward?
Listen, I think that the industry is ripe for consolidation, especially as you think about the cost it is to be a public company. Like we've got a tremendous amount of our annual fixed costs and being a public company are meaningful. And so if you're able to consolidate your operations with another public Bitcoin miner, you then cut that duplication of public company costs, whether it's legal fees, filing fees, insurance, all that sort of stuff gets cut in half. So there's tremendous benefits to scale. And I think, we saw in a matter of 12 months, almost 20 new public companies come to market in the Bitcoin mining space. And so there is the need. I think it's, there's mentalities. A lot of these are founders of the companies. And so there's social issues at play. But I think the natural evolution of this will be for consolidation, because the benefits of economies of scale are very real and would create a tremendous amount of value. So I do think we're going to see more and more consolidation. I think this year has been difficult because of all the market turmoil, the public lawsuits, the SEC investigations have sort of things are taking a lot longer to get to the finish line. And so there's been a lot of fits and starts as it relates to consolidation, but I do think that we're going to start to see some successful combinations materialize over the coming year.
Okay, another cycle I noticed in the Bitcoin miners and you probably see it in other commodities, is that when the cycle is high, everybody's rushing to mine, to buy machines, and to take debt. And when there's a correction, the most leveraged ones go bust. Last year in 2022, you've seen some going bust. And now with the halvening, and everybody is speaking about all the catalysts that are coming with the spot Bitcoin ETF, with the halvening that is historically a boost for Bitcoin's performance. I would not be surprised to see more Bitcoin miners rushing to buy pricing power and to get leverage. And therefore you cannot have a consolidation if you have like always people chasing this underlying that is cyclical,
Right.
which I think you saw it also in the shale oil in the US, where as soon as the oil price dropped, you had a lot of companies that were very leveraged that went bust, and then it went back up, so they went back in. And if oil price goes to 100 or 120, the cycle will repeat again, and you will never see this consolidation.
Right. I think that, listen, it's fair. I think now everyone's very focused on profitability right ahead of the halving. And you raise an interesting point about, leverage and debt. I think in many ways that obviously plays a significant factor in determining, the merits of a combination. We at TeraWulf have debt, and we've been very focused on paying down our debt. And that's really been, where our mission has been, especially for the near term as we approach the halving, is really increase our profitability and return that to shareholders in the form of, paying down debt and getting our capital structure to the most efficient place it can be. But it can be, it's almost like this sector has FOMO in a way, right? So like there's a mad rush to enter into equipment purchase agreements that are sizable and scalable because you feel like you're going to miss out on an upswing. And so there's a lot of sort of, part of it's because of the volatility inherent in the market itself. There's a lot of significant swings and shifts and corrections one way or another. But I think, over time, that should hopefully start to diminish, particularly as, obviously Bitcoin mining is the profitability of the Bitcoin itself is going to become less and less. And we're going to start to see more transaction fees and other ancillary revenues make up a portion of the revenue stream. But the cyclicality and sort of the mental impact it has on executive teams and CEOs as they think about consolidation and timing of that certainly is very similar.
Okay, you mentioned that you have debt. I've looked at all the financing deals and all the debt that was raised, and in general, compared to other industries, the interest rates paid by Bitcoin miners is much higher, sometimes north of 20% when they take debt. How did you raise yours, and how did you manage if if you did, to have competitive rates?
So we raised our debt at the time of going public, which was in December of 2021. And we actually have a very constructive and cooperative group of lenders that support our business. So we raised term debt at a very, not at an over 20%. We're actually at 11.5% cost of debt. We have a cash sweep mechanism, so we're not tied to specific and structured principal payments. The lenders are really supporting the growth of our business as well as the volatility of our business by enabling a cash sweep. So, we structured that as a 3-year term deal. We're working with our lenders now. We've restructured the debt, a handful of times. We're always sort of tweaking and making the debt more efficient and aligned with the way that we run our business. So, listen, the debt markets, it's if not closed. It's very difficult to raise that kind of capital today. But again, we are focused on reducing our debt as quickly and as efficiently as we can, so that we can start to return profitability in the form of dividends to our shareholders.
But for Bitcoin as a whole, when at the same time you had Warren Buffett calling Bitcoin rat poison squared. So how do you manage teaching your kids where the true lies? Like you have one of the most savvy investors in the world that is telling them that their mom is mining rat poison.
Well, listen, again, it all again comes back to forming your own opinions and having the education and at least being informed when you make statements and take a position and take a point of view, especially when you have such an influence on the world. I think Bitcoin we're still working our way out of a lot of misconceptions and misunderstandings. And I think even as recently as a few weeks ago, when you think about the headlines of Bitcoin being used to fund the Hamas operatives, and it's unfortunate, and that obviously was a setback when you see articles like that. But in a way, the way I think about it is it ultimately became a good opportunity, right? Because we need to go after the bad actors, not the technology. And so, Twitter and social media went wild, right? Because the article was published by the Journal. They want to say journalism is broken, but the reality is that some of it was wrong. And so there was a significant effort and response from people to help say, this is where you got it wrong. And I don't know if you saw, but the Wall Street Journal recently printed a redaction, which I think, listen, it wasn't a full redaction, but it was an acknowledgement that the sources of information were not correct. And I think that's actually a big step forward because of that experience, journalists will look at things differently now. And I think we'll be less likely to print something like, Hamas raised 100 plus trillion dollars in Bitcoin to fund their operatives, as they might have been before. Senator Warren printed a letter. She hasn't retracted her letter, but we've spoken to many of the senators that signed on to say, hey, listen, this is what wasn't right. And so I think there's now going to be an increasing willingness to say the next time something like this comes around, hey, is this stuff right, before just signing on to something, because it tends to have, the popular mindset at the time. And so I think we need to avoid personal attacks and find sort of thoughtful and rational way to approach this. And again, it all comes back to education and not letting our emotions take the lead. Our sector tends to be pretty purist and emotional at times, but I think with a proper and thoughtful response to things, the willingness to educate, the willingness to try hard to get someone's attention to say, let me help you break it down. Over time, it's working, right? And it's these small little moments like this, like the Wall Street Journal retraction, that are really starting to, I think, signal a shift in the mentality around all of the negative misconceptions around Bitcoin mining, and the network as large.
Yeah, but still, I mean, we're celebrating the 15th years of the Bitcoin white paper today. So I wouldn't have imagined still today to have this kind of mainstream media like the Wall Street Journal publishing such a false and really little research article about a topic that have been addressed over and over again. And when I compare it to the internet, I mean, the internet was a very big
Mm-hmm.
facilitator of criminal activities, and it made like all
Mm-hmm.
kind of criminal activities much easier and
Right.
efficient to do. But people tend to balance these downs with all the positives that we have thanks to the internet.
Mm-hmm.
When it comes to Bitcoin, it feels like as if when it comes to money and value and like property, people are very less receptive to education and to arguments and tend to jump on conclusions first before analyzing the pros and cons.
I think that's
How
right. I think part of it's because people haven't fully digested the pros, right? It's easy to have a strong negative view on something when you haven't taken the time to actually understand the flip side of it. And I think that's the struggle we're having, right? And it's just going to take persistence and a rational approach to get there. But I think it will happen.
I hope so too. Thanks a lot for your time, Kerry, and it was a very good discussion. And I hope to jump on another call as soon as you have some news coming on your end. Feel
Perfect.
free to give me a buzz.
All right. Thank you, Jad. I appreciate it.